What if your mortgage payment jumped from $800 to $1,200 a month without moving, renovating, or even refinancing? For thousands of Ottawa homeowners renewing in 2025 and 2026, that's not hypothetical. That's the default path. And yes, even if you've never missed a single payment, your lender can still say no at renewal if your profile no longer fits the rules. Today, I'm unpacking what's happening right now in Ottawa, who's most at risk, and the 5 moves you can make this month to protect yourself. Stay to the end because I will show you exactly how to stress test your renewal the way the lenders will. My name is Liam Swords. I make videos about living in Ottawa. I'm also a top producing realtor helping people just like you make Ottawa your home. Between 2020 and 2022, a huge chunk of Canadians locked into ultra low rates, anywhere between 1.5% to 2%. Those terms were expiring in today's still higher environment. Regulators warned this would create a payment shockwave. In fact, 76% of all mortgages outstanding in February 2024 will renew by the end of 2026. That's not a trickle. That is an absolute convoy. Now, add the latest macro shift. On October 29, 2025, the Bank of Canada cut the policy rate by 25 bips to 2.25%, the third straight cut in 2025. Good news, directionally, but it doesn't erase the renewal math overnight. Many borrowers are still rolling from the pandemic lows of rates that are really like mid-4s to 5s, depending on the term and product you choose. Bank of Canada staff insiders expect that 60% of borrowers will be renewing in 2025 and 2026, and they will see much higher payments versus December 2024, renewing in 2025 to 2026 to see higher payments versus December 2024, roughly 10% in 2025 and 6% in 2026 on average. So the translation, that was a lot of numbers. Cuts help, but the gap many households feel at the renewal is still very real and scary. Now let's talk about the 2 Ottawa broader borrowing groups. Group A, 2020 to 2021, 5-year fixed. You had time on your side, low rates for years meant more principal pay down and a cushion from the home price appreciation. Your payment jump is still uncomfortable, but you often have equity and options. Restructure, blended, and the ability to push out amortization. So your amortization resets. So I got a question from a client moving from Arizona. He said, Liam, I get a mortgage for 5-year term, 25-year amortization. After 5 years, what's my amortization? Is it 20 years? Is it 25? Well, the choice is yours. Most people, to pay your mortgage down, you keep chunking down. So you don't reset your amortization. However, in the climate that we're in right now, I'm going to see a lot of people signing back up for that 25, 30-year amortization just to make the payments work. Group B. This is the 2023 year of short-term thinkers. You took a high rate expecting quick cuts. Cuts came later and smaller than you and I had hoped for. After about 3 years, at 5 to 6%, you haven't really made any meaningful reduction on your principal. Equity growth has been modest, and you're now facing renewal in 2026 with less room to maneuver. Lenders know this. Many will push a straight renewal, switching you may be harder if your income, debt, or credit has changed. So the Ottawa reality check. Inventory has climbed from the pandemic era, and we're in a balanced market, giving buyers more choice and softening the just stretch and buy it mindset. Example for you, active listings in Ottawa are at 3,971 in August and 4,388 in September, well above the recent norms. Balanced market vibes help buyers, but for sellers facing renewal squeeze, pricing power isn't what it was. The most common question that I'm hearing right now is, but I've never missed a payment. Can my bank still say no? Well, the short answer is yes, it's possible. Renewal isn't automatic. If you no longer meet the internal risk policies, lenders can recheck income, including CRA filings, debt obligations, and property condition insurance and decide not to renew you. And with the perfect payment history, if you do get declined, your options are narrow. Negotiate hard with your current lender. Consider a switch or transfer and look at maybe credit unions or alternative lending. Start early so you're not cornered. Important Ontario note: we're a power of sale province. So default isn't only missed mortgage payments. Clauses about property taxes, insurance, or condition of property also have covenants. Serious breaches can trigger enforcement steps leading to a power of sale process without a court foreclosure, which moves faster. Keep taxes and insurance current. Talk to your lender before small problems become legal problems. Ottawa numbers. What the jump looks like. Well, let's do some simple math and look at this framework to put it all together. So the average $500,000 balance renewing from about 2% to mid 5% environment. So the monthly rise could be anywhere from $800 to $1,000 depending on the term and amortization. The Bank of Canada's analytics say that the average Ottawa area borrower renewing in 2025 could still face about 10% higher payments versus December 2024. 2026 looks softer, about 6%, but that's still a climb for many households. The recent Bank of Canada overnight lending rate cut to 2.25% has a tailwind. They reduce how high that renewal rate prints, but they don't reset you in the 2021 payment plan. There's going to be a gap. So the question is, who in Ottawa is most exposed? Well, a 2023 short-term fixed borrower, so that 3-year term, that bet on quick cuts, they're hit the hardest. Then we have the fixed payment variable borrowers whose amortization just ballooned out. Renewal recalculates everything. Self-employed entrepreneurs, so variable income households where CRA filings don't show the same income history, and multi-property owners carrying condos, townhomes with higher fees and expenses. If rents didn't catch up, renewal math stings hard. Meanwhile, Ottawa's shift towards balanced condition means buyers have leverage and appraisals may be more conservative. List prices need to meet the market if renewal forces your hand. 5 moves to protect yourself in this current environment that we're in. Number 1, start 6 to 12 months early. Don't wait for the letter. Ask your current lender for early renewal quotes and simultaneously get broker comparisons. If your profile changed, time is your most valuable asset. Number 2, run a real stress test. Price your payment at about 2 to 2.5% above the best quote you see on a 25-year amortization. If it breaks your budget, fix the budget now, not on closing. That's the best way to protect yourself. Number 3, prepare your file like an underwriter. 2 recent NOA, so notice of assessments, up-to-date T1 if you're self-employed, current T4s, employment letter, pay stub, make sure it's ready to go. Clean up any consumer debts where it's possible. So rolling high interest balance into a structured refinanced area can improve cash flow if done properly. Number 4, consider structure over rate. Shorter 1 to 3-year term to stay flexible, or amortization resets to bring the payment down. As I was saying, maybe push out to another 25-year amortization. Hey, I'm all for paying your mortgage down. However, what does the monthly cash flow look like? You don't want to corner yourself. You do not want to be house poor. The lowest rate isn't always the best survival plan, especially in this market that we're in. And the final number 5, guard against technical defaults. Keep property taxes and insurance current. Fix maintenance that affects insurance and safety. And communicate early with your lender if income is changing. This avoids giving a lender a non-payment reason to escalate your file. If a renewal is going sideways, act before you're in a time crunch. Price to sell on your timeline, not the lenders. In today's Ottawa market, buyers have choice. Make sure it is a clean presentation, staged, and price your property realistically. Downsizing isn't defeat. It's defensive play calling. Lock in stability and then rebuild. Investors, stress test at 6.5% plus effective cost and be honest about cash flow. If a unit's bleeding, trim before more inventory hits the market and competition rises. If your renewal is inside 12 months, Drop renewal in the comments below and I will send you my Ottawa renewal prep checklist. If you've already received your renewal quote, I'd be curious, comment in the term below what your term and rate is. We can do like a crowd comparison. We're all helping each other here. And if you want to get ahead of the curve, my next video right here breaks down exactly how to survive the mortgage renewal crisis, step by step. You'll want to see this before your renewal letter hits your inbox. See you there.